2025 has definitely been a very interesting year for stocks. We started the year with some pretty extreme volatility because of all the tariff drama, and at one point stocks were down into the double digits. But as of the past couple of weeks now, it looks like we're starting to recover from all these losses that we had from the beginning of the year. So I did want to talk about a couple different stocks that I think have pretty huge potential to end this year with some pretty massive returns and continue growing for years to come. Starting with the first one, which is one of my favorite companies called Axon. Just a really interesting and unique company with a sort of monopoly-like structure, mainly because it's been around for so long. Its main business model is selling law enforcement technology, but also making recurring revenue from software and services. So it's a company that's a blend between selling hardware technology as well as software as a service or SaaS. And some of the main hardware products that Axon sells is the Taser stun guns. In fact, Taser is the brand that Axon owns. They also sell things like body cameras and in-car cameras like dash cams. Axon's current stock price is $733, and it's taken part in this big market recovery that we've had over the past month and a half now. Its 1 month return is over 46%, with a year-to-date return at around 23%. Another thing worth mentioning is its extremely healthy growth metrics. Its year-over-year revenue growth is 32.7%, which when comparing it to the rest of the sector is extremely high. It's also been generating tons of free cash flow with 168% year-over-year free cash flow growth. And its free cash flow per share is expected to grow at around 68% per year going forward. So Axon has seen incredible growth over the past year or so now, but I do think this consistent growth will continue for years to come. This brings me to the next one, which is Doximity, or ticker symbol DOCS. Doximity is a digital platform where medical professionals like doctors can connect, share information with each other, and even make video calls with some of their patients. And as of right now, over 80% of US physicians are members of the platform. And because it's a software company, its margins tend to be much higher. It did recently have its earnings call, and despite beating earnings estimates and having higher than expected revenue results, the stock price still fell about 12% last week. But to me, this creates an even better buying opportunity going forward. This is also a very fast growing business with over 20% year-over-year revenue growth. And on top of that, 35% year-over-year free cash flow growth. Year to date, it is down about 2%, but I think going forward has a lot of room to recover. Its market cap is just under $10 billion, so kind of in that mid-cap range. And because of that, I do think the business is in a great spot and has a lot of room to grow into that large cap range. The next one takes me to another one of my favorite companies that has a lot of potential to continue growing. It's called Texas Pacific Land, or ticker symbol TPL. A lot more expensive of a stock in terms of its price. It recently closed at $1,430, which isn't quite at its all-time high of $1,730. So because I don't have a ton of capital to invest each month, I've just been buying fractional shares. This is also another very unique kind of monopoly style business as well. In a way, it's a real estate company that owns 868,000 acres of land in West Texas, mainly in the Permian Basin, which is one of the most productive oil fields in the United States. Rather than producing its own oil, it actually makes money from other companies that extract the oil from the land that it owns. So it's quite literally a real estate landlord for oil and gas. Another reason why I really like this company is that it also has very high margins because the royalty income that it receives requires little to no expenses in order to receive it. It's also fairly low cap. It's kind of in that mid cap range as well at a $33 billion market cap. So it also has a lot of room to grow well into that large cap range. It pays a very small dividend of 1.15%, which ever so slightly helps with compounding those returns. And because of its very powerful business model, I do think it'll continue producing double-digit returns going forward. But let me know what you guys think of these 3 high-growth stocks and whether or not you'd consider adding them to your portfolio, and I will see you all next time.